everyone and welcome to another Elliott Wave Forecast video day. My name is Eric. Today is the 14th of January around 4:45 p.m. Eastern Time, and today we're going to take a look at the FTSE from UK, and we're going to explain how in Elliott Wave Forecast we're looking at the FTSE and how the way that we look things with the sequence and Elliott Wave, the FTSE is telling us that this dip in the world indices is another opportunity to buy. This is the FTSE as shown in this chart from the all-time low to current price over here. And the FTSE is one of the most interesting instrument across the planet. And the reason is because the FTSE is one of the indices that is showing us an incomplete sequence since the all-time low and what we call the grand super cycle degree. I want you guys to know that these are not Elliott Wave levels. These are cycles, and these are cycles in which we relate then and get and apply Elliott Wave to these cycles to produce a forecast. If we can see here, this is the all-time low in the FTSE, and the FTSE ended here what we call a super cycle degree. This super cycle degree ended in the FTSE in 1999, and the other hand in the S&P ended around 2000. But both makes what we call in Elliott Wave a flat in 3 weeks, and the FTSE start another super cycle degree in 2009. What is interesting is that the FTSE already took the peak of 1999, but contrary to the S&P, the FTSE has not reached the 100% extension in which this super cycle degree is equal to this super cycle degree, which makes me to believe that there is still the possibility of more outside in the world indices, because the market always go into the famous already blue boxes, which is the equivalent to high frequency trading target, and this, the 9172, is the FTSE a target in the grand super cycle degree, and it comes at the 9172, 11451 area. What we see now is that the FTSE is incomplete from here, and that when we look at the RSI of the monthly chart over here of the FTSE, we see a tremendous momentum divergence here, and that is bullish. That momentum divergence is bullish because that means that this cycle is not completed, and that means that because the structure from the all-time lows is either at ABC or is a nest, which is 1 2 1 2, more outside will follow. If it was no RSI divergence, we were contemplating the idea that we can drop into this area, but the RSI divergence is telling me that we will continue higher. The FTSE within these super cycles in 2009 is showing 1 2 3 4 5 swings or 5 waves. Consequently, this wave 1 in blue, or wave 1, no, swing 1, because it's cycle. This swing 1 in blue, it becomes interesting because it comes from the 618 of 1 and 2 red, which is telling me that is the possibility that this ended as a 5 waves diagonal, and that we correct in 2009, and then the FTSE, it will remain after this cycle ended. The FTSE is gonna end, this cycle took 105 months. That means that from sometimes this year we can get higher into the 2000 right there into the 2027 area, in which this cycle will be equal from here. But times we tell how we're going higher. Time we tell if the wave, if the swing 1 in blue and swing 2 goes here, and then the 5 because of 1. These are sequence, but regardless, how we going higher. What the market is telling me, what Elliott Wave sequence are telling me, is that the indices will have more upside regardless. So overall, we look at the FTSE, the incomplete equal X in red 1 and 2. We look at the FTSE, the 5 swing from the 2009 low, and we cannot look all the way to say that this is not the crash that many people believe it is, that this is another opportunity to buy. In Elliott Wave Forecast, we cover 78 instruments, and we look around 100 instruments every week, and we always relate the instrument. We find the sequence, and what we do is we're gonna go and we relate, then gather the age of the market, and then we able to trade with the right side. The right side in the world indices is still bullish in the weekly, monthly, and yearly charts. And in the 4 hours and daily hours, we need to follow another's, like Baba, to be able to find the right timing and entry into the market. Very simple, guys. No stress, no fundamentals, no news, no events. This is pure technical. And the FTSE by 2022, 2020, or 2027, the FTSE will be at 91.72, 11.451. Right there, we need to worry about a great crash across the market. Until then, keep buying the dips. If you like the video, we invite you guys all to take our 14-day free trials. If you want to learn the sequence, buy educational context here, so you learn how to see the market this way. If you want to subscribe, a good promotion of 30% off in every month, a monthly plan as of right now. See you guys around. I hope you guys enjoy the video and know what keep buying the indices is the right trade in the market. Thank you guys all.